It's Thursday and you're watching FreightWaves Now. I'm your host Anthony Smith, and coming up, Mike Baudendistel is going to give us a rail intermodal update. But first, we're going to go to Zach Strickland with Carry Update, brought to you by Powerfleet. Stay tuned.
Hey everyone, and welcome to your Thursday Carrier Update presented by Powerfleet. I'm Zach Strickland, and today we are watching those volumes continue to increase into the holiday. Again, how much of this is, related to the Memorial Day weekend coming up or whatnot, we're not really sure. But again, these are unusual times. So, outbound tender volume index in green over the top of our outbound tender lead time index. Now, we're seeing some interesting patterns emerge here in this new post-COVID-19 world, where you see these huge towers sitting out here on the top of the tender lead time index there in the blue mountain. Those are holidays, so a lot of freight moves in front of these holidays. Therefore, a lot of shippers get out in front of it and say, I need to push all this freight, I need to put these orders out for next week before I leave the office, before I leave the warehouse, just to make sure that they have appropriate lead time on coverage, because they know that carrier capacity diminishes during the holiday period. So what's interesting, however, is that we're actually seeing lead times drop, or we were seeing lead times drop pretty significantly here over the last couple of weeks. Again, it's almost like there's this sense of urgency with freight. The freight that's moving right now has a little bit more sense of urgency to it than it was seeing there back in the middle of April or whatever, when the freight market was bottoming. There just wasn't the same sense of urgency on the freight. But however, here in the last month or so, tender lead time is dropping from about 2.9 days to around 2.6 days. Now, that may not seem like a lot, but when we're talking about thousands of loads here, that's a pretty significant drop in lead time. Again, indicating we are seeing a little bit more urgency on these orders that are coming through. Again, the exact mechanics of that process, especially on the shipper side, not quite clear at this point, but I do know that we are not seeing these tower lead times. If you go all the way back to Memorial Day last year, we had a huge tower leading up to that, and we're just not seeing it this time. But freight volumes are increasing nonetheless in front of the holiday. Something to note, the weekly change in tender volumes right now, it's starting to moderate a little bit. We're still on an upward trend, but it is slowing down a little bit, which is something that we would expect to see. Maybe a little bit of a boost due to the Memorial Day holiday and more freight volumes moving in front of the holiday, et cetera, keeping it a little bit more elevated, but it is only increasing at 5.7%, where it was closer to 7-8% there in the last week or so. So again, we are starting to see those volumes slow down a little bit on their increase. Now, where are these volumes taking off in the country? What has happened? What's changed? This is the outbound tender market share for the monthly change and volumes. I like to look at this because it gives me kind of a relative view of who's increasing the most, who's decreasing the most as it relates to the rest of the market. Right now we're looking at Los Angeles, for instance, 19.3% up month over month in terms of market share value. So they have gained a lot of market share in terms of outbound volumes over the last month or so. Atlanta up here in the top spot for the largest outbound market in the United States, right around 4.4% of total outbound volume, down 1.8%. So this is something we actually expected to see, was a very uneven recovery period. You can see this is a mixed bag of volumes going up and down throughout the market. As we're starting to really get into this recovery period a little bit more deeply. So week over week, where are the volumes increasing? So we can see what is bouncing up the fastest. You can see out here the Los Angeles market, the West Coast, really driving a lot of freight volumes here in the last little bit. Out there through Texas, Houston, et cetera. These are the largest markets in the United States, and a lot of them are showing green on here. The one that sticks out to me, however, Los Angeles market, really driving a lot of freight right now. Again, right there in the Port of Long Beach, Los Angeles, a lot of freight coming in right now. This could be an explanation of those lead times. I have lead times pulled up for this one. You can see the lead times plummeting out of the Los Angeles market. Again, not a lot of capacity coming across the ocean on the air side, so a lot of the freight that is moving needs to move rapidly. And again, volumes really taken off in the Los Angeles market. Tender rejection rates, going up slightly, 5.3%. So it is getting a little bit tighter out there in LA. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from Powerfleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with Powerfleet.
Welcome to your Rail Intermodal Update. We have a jam-packed segment with Mike Baudendistel. Mike, what's the latest?
Well, the AAR put out their latest rail traffic yesterday, and for North America, rail carload traffic is down 29%. For the U.S. carriers, which is what I have on the screen here, down a full 30%. So really, if you look at the industrial portions of the economy, not seeing a lot of evidence that those are improving, unlike some of what we're hearing on the trucking side. The comps are getting a little bit tougher, but you sort of see in the last week, really it was actually down a little bit further. If you head over to the intermodal side, that's a different story. Intermodal, we are seeing some improvement off of the bottom in April and through May. Still nothing like what Zach and those guys were talking about in terms of volumes on the trucking side, where they're talking about those being back at February levels. Here we're just sort of back kind of March levels, sort of things before things really fell off. So you have seen some, kind of recovery there. Here we are facing, easing comps because, throughout the year last year, intermodal weekend. So intermodal down about 12%. Sure looks a lot better than rail carload traffic being down 30%. We can break this down in sonar between domestic intermodal and international intermodal. You think of those as being two very distinct markets. And this chart, shows maybe just how distinct they are. The international intermodal volume, so this is where the steamship line is the shipper, and those go intact on the international containers. You just see, really those started to fall off much earlier than the domestic intermodal, shipments did. And there, looked, closer to you, really haven't seen any improvement, there. Those have just been sort of flat to even down in May. So those are really, more dependent on the customs imports, the ocean traffic, those type of things. On domestic intermodal, so these are primarily moving in the 53-foot containers. You see this fall off much later, and that's had more of kind of a Nike swoosh-shaped recovery. Would attribute that to just more of the freight that's been moving lately. I think it's been a lot of the domestic freight, or it could have been some of those volumes that Zach was talking about out of LA being transloaded into 53-foot containers and then being moved. If we compare that to long-haul trucking, so long-haul trucking here is in orange. Those are for lanes that are longer than 800 miles. You see a pattern where long-haul trucking really, did participate in the surge, the panic buying surge, whereas intermodal did not, sort of in the middle part of the screen. And then you've also seen more pickup in the long-haul trucking than you have seen with domestic intermodal. So think of those things as being, competitive. I mean, it depends a little bit on which lane you're talking about, but still seeing more volume shift from the railroad to the truck. And just have one more slide to explain why. These are truck stop 7-day van rates between Elizabeth, New Jersey and Chicago, so call it New York and Chicago, and you see just how much those have declined, going from about $1.35 a mile down to $1.07. Intermodal spot rates are much more stable, but those have declined some from $1.17 to $1.12. But still, you sort of look at this and say, well, trucking is less expensive. There's just a piece on FreightWaves.com talking about what was said yesterday at a Wall Street conference, and most were suggesting also in most lanes, trucking is cheaper than intermodal. So intermodal is having a tough time, growing, faster than the market.
Mike, thank you so much. Jam-packed segment, insightful as always. Thank you so much as well for tuning in. That's going to do for this segment of FreightWaves Now. The fun doesn't stop here. We're always streaming around the clock, so check out our content on FreightWaves TV and check out our FreightWaves TV app on all your favorite streaming platforms. Thank you so much for tuning in, and we'll see you on the next episode.